Hello, another volatile week for energy prices, so let's take a look at the week's actions in some more detail. Brent fell over $9 per barrel on Monday as planned US military strikes on Iranian energy infrastructure were postponed. The downward direction was short-lived and prices rebounded on Tuesday. Prices were volatile within day due to conflicting reports about the proposal for de-escalation as Iran denied direct negotiations. Brent closed lower on Wednesday, although prices were very sensitive to any news reports about the 15-point proposal to end the war. Prices jumped higher on Thursday as President Trump threatened Iran with intensified military action. Market participants continue to assess the impact on supplies if the war is prolonged. Last night, front-month Brent closed at $108 per barrel, which is down $0.55 compared to last Friday. Near-term contracts fell on Monday in line with weaker oil and comments from President Trump that detailed and constructive conversations were underway. Contracts from summer 27 onwards, however, held their value. Despite the upward movement of oil, gas prices continued to ease on Tuesday. All contracts then fell on Wednesday, although losses were not as significant as those seen earlier on in the week. And then all contracts firmed on Thursday. The US insisted peace talks were underway, whilst Iran publicly rejected this claim. Last night, despite the gain seen on Thursday, all curve contracts closed lower compared to last Friday. Winter 26 closed at 141 pence per therm, which is down 6.7 pence per therm. All curve contracts fell on Monday, tracking gas lower and ignoring the bullish sentiment from carbon. Prices moved downwards throughout Tuesday's session, however losses were limited due to higher carbon once again. Contracts mirrored the movement in gas on Wednesday and indeed Thursday. So last night, curve contracts closed lower compared to last Friday. Winter 26 closed at £108.3 per megawatt hour, which is down £1 per megawatt hour. You can download the full version of this market report from our website. Thanks for watching. See you next week.